1 in 3 California restaurants are closed permanently. Today, we're going to look at the effect of the shutdown recession that was implemented or induced in many states, and especially very heavily here in California, and the restaurant industry is heavily affected. 1 in 3 restaurants. Now, first of all, let's start right here. This is an article out of KTLA, and we reported this not too long after it came out. It was about a year ago, but we're going to give you an update here, and things are actually worse than we suspected when we first noticed this article right here. Right now, here's the headline. California restaurants say 30% could close permanently without state aid. In fact, it's a little bit worse than what was reported at that time. Let's take a look at a recent update on this. And this article out of lamag.com points this out, this devastation in the restaurant industry in California. Almost a third of California restaurants permanently closed last year, and they're pointing to this AP article. And the data is buried in this article right here. California restaurants expect rebound that will take years. Recent report from this article, 2/3 of workers were at least temporarily displaced or lost their jobs in the restaurant industry due to the shutdown recession and the collapse of the restaurant industry. Also, nearly 1/3 of California's restaurants are permanently closed. Now, before the shutdown, there was about 76,000 restaurants in the state of California that employed about 1.8 million people. Right, so think about that. 1 in 3 restaurants closed here in California. And it's going to be mostly, and it has been, and it'll continue to get worse, but it's mostly the smaller mom and pop family run businesses. Of course, there are some big national chains that did close down some locations permanently, but the restaurants most unable to deal with this crisis are the smaller independent restaurants. And now add on top of this the labor shortage and more people either not wanting to or not able to go back to work. You also have another big part of that is the childcare situation with a lot of parents that just simply don't have childcare because of the school situation, and they have to be at home still in many cases with their kids doing homeschooling. Even some people that would normally go back to work, people that actually want to work, in some cases can't go back to work. That's part of the labor shortage. Another part of that is the stimulus is incentivizing people, and also the enhanced unemployment benefits are incentivizing people to not go back to work. So yeah, the restaurant industry is going to continue to be devastated when you factor in also the labor shortage. We have the rising food prices and the supply chain disruptions. So we'll see how it goes. I expect it to get a lot worse though. So think about this though. We reported that article a year ago that this could happen, and we said about 30%, and actually it's closer to 33%. So we underreported the severity of the situation. A lot of people say we're doom and gloom. A lot of times it's worse even than what we report here. Right? So maybe we're not doomish and gloomish enough when you look at when the facts actually come out based on what we predicted. Well, what else have we been right about? Well, just about everything. Let's take a look at a couple more recent examples. Right, the crypto market, we said when this chart happens here, this hockey stick pattern where it goes nearly parabolic, you're likely to see a correction. Here is a chart of Bitcoin, and we did see that it peaked just over 60,000 here, and we saw nearly a 50% correction. It actually touched 30,000 here just recently. So roughly a 50% correction, and I absolutely expected it. Remember, people were making fun of me when I said, okay, I sold a little bit at 40,000, I sold a little bit at 50,000. And the strategy is never to sell all of it, but take your gains. That way, when the price does correct, and it always does at some point, then it doesn't matter because you've already made your gains. Now, I'll be buying more on this dip. I won't be going all in, but I'll definitely be buying more. Not just this, but some other digital assets as well that took big drops. And then what's going to happen? Well, it's going to go up even higher than what it was previously. So I expect Bitcoin to surpass 60,000 at some point, and other coins that took big corrections. You may want to take a look and see if now might be a good time to go ahead and pick up some of these on a discount because we know the money printers are not going to be pulling back on their printing, and there's going to be lots of money looking to get out of the US dollar and into an alternate asset. Right? I'm still also accumulating precious metals, still stacking. Link down below if you'd like to pick up more silver. I think silver's day is actually not yet here. I expect big things to happen in precious metals and silver. And at some point here, I expect at least $500 per ounce silver. Just my prediction. Take it with a grain of salt, but everything we've talked about here pretty much has been dead on accurate. Right? Anything can happen. I'm not giving financial advice. I am not a someone here to analyze each and every person's financial situation. Do your own research. But what we've seen yet in silver, I think, is just the tip of the iceberg. Right, another recent example, what else have we been right about? Well, the housing market. Remember when the shutdown recession first kicked in, and how many people were out there saying the housing market's done, it's going to crash, all these people lost their jobs. Homes are already expensive, and now these people are not going to be able to make their payments. And I said, wait, they can keep this propped up. All they have to do is prevent foreclosures. Guess what they did? They prevented foreclosures. They can keep the banks liquefied and operational, even though millions of people quit paying their mortgages. Why? Because it's fiat money created out of thin air in infinite amounts. They can keep the markets propped up, and a lot of people got a lot of views. My channel took a lot of heat and actually lost a lot of viewers. People unsubscribed because I said no, the housing market's going to continue to go up. Why? Because it's manipulated. It's manipulated. It's backed by unlimited amounts of fiat money. They can change the law so people won't be able to lose their homes. They can prevent people from being evicted. And that would put a floor under rents also. We predicted all that, and all that was 100% accurate. And now, guess what? It's about ready to get a lot worse. The housing bubble is about ready to get bigger. Why? We have more juice flowing into the housing market. This is mortgage assistance now being rolled out. Let's take a look at a recent article. And this is out of moneywise.com, a $10 billion mortgage relief package. It's on its way, and some states are already implementing this. The states that applied for this money are getting ready to pass it out. If you're having trouble paying your mortgage and your debt is piling up, you may be eligible for some relief. The $1.9 trillion relief package also provided about $10 billion of direct financial assistance to help homeowners pay not only their mortgages, but taxes, utilities, insurance, and homeowners association dues. So this relief, when on the surface it looks like you're helping the homeowners, where is it going? When the homeowners have debt, it's going to go right to the bank, right? So it's going to help them pay their mortgages, the bank benefits. It's going to help them pay their taxes, the county and the state benefits. It's going to help them pay their utilities, the utility companies' benefit. It's going to help them pay their insurance, the insurance corporation's benefit, the HOA association benefits. The homeowner at the end probably still living paycheck to paycheck, but the banks, the state, the companies, the corporations, including utilities and insurance companies, they actually get the money in the end. Why? Because when you live in debt, essentially you're working every day to pay the piper. So expect the housing bubble to get even bigger, right? The only thing that can stop this is some sort of freeze up or stoppage of the monetary system. That would be a freeze in lending, where banks are actually unable to loan out money that they actually don't have. No more creating money out of thin air. Is that likely to happen? It's very unlikely. So it's foot on the gas for the money printers, for the banks. The Fed has really shown no sign of slowing down as far as support for these markets in the banking system. So more debt, more lending, you guessed it, rising prices. We're going to wrap this up, everybody. Please let me know about what you think about 1 in 3 California restaurants closed and hundreds of thousands of people now no longer working. where will they have to work? Probably in fast food or some other hospitality and service sector job. Unfortunately, that's where a lot of us are headed as things continue to get worse. Thanks everybody for watching this report. Stay well, keep stacking, stay prepared. Bye for now. Peace.